currently on New Zealand US dollar. Today, as you know, the way I trade, today is New Zealand. That currency is the only currency, along with Euro, that's supposed to move today on Sunday, um, around 4:44 p.m., which is around when the market opens around 5. So, what I'm planning on doing for New Zealand is yesterday, I prior to yesterday, I actually went on the chart and I did analysis for New Zealand. And so here's what you guys want to do. So when you're trading smart money concepts, you trade fair value gaps, supply and demand zones, order blocks, things like that. You're doing your market structure. The first thing you're going to want to realize on New Zealand, it's a slower pair and it tends to move during Asian session. And because of that, you're going to actually want to identify the trend on a lower time frame, like the 5 to the 15 minute, because it's a slower moving pair. And I got this trend with the blue lines here. You can see my highs and lows. I had my high, previous low, and then I went on the 5 minute, and the 5 minute is just to confirm my actual entry point. So once I establish my trend, I always want to buy low. And once I establish, like if I'm in a bullish trend, I'm always going to want to buy at the middle of the trend, at the middle of my range to the low part of my range. And so what I mean by range is the range is what I identify after I look at my market structure. So this blue line right here, this low, is my my current low, and the top blue line is my current high. These two lines represent my range, right? Because when price moves through the news, price ranges, and those ranges break new highs and new lows. And right now, our previous high, all-time high, was here, and this range, because of the news, this price range broke and created a new high up here. And so when I'm looking for fair value gaps, I always want to establish the trend first, because that's going to give you an idea, or give me an idea, where those fair value gaps are going to be found. So if you go on the 4-hour and the daily, these are major time frames where you can find major fair value gaps. And the reason looking on higher time frames is important is because there could be something going on a time frame like the 4-hour, and because you're only focused on the small time frames, it prevents you from seeing what could potentially happen. Because right now, if we go on the 4-hour, it looks like we have some bearish price action coming down, potentially testing this demand zone right here. And so we could possibly just have price reverse and come from this point on, right? Because what does price do? Price goes up, and then price comes back down to retrace, to balance out price before going back up. And so the whole point of my strategy is I'm always basically entering off of the pullbacks and retracements. So if there is no retracement, I'm not going to enter. And so most people, they try to enter on the impulse. And what's wrong with that is the fact that the impulse move is pretty much over, because we're already at the high, right? And eventually the market needs to come back down to retrace. So it's actually dangerous to be entering a buy position at the top of the market and selling at the bottom, because if you're selling at the bottom, let's say the market's going down, you're selling at the bottom, the move can be already over and it's about to go up. And so this is why market structure and trend, if you're doing market structure correctly, is supposed to help you, and is one of the key factors in finding your setups in the first place, because it tells you where to look. And there's only a couple places of where to look. There's only up and down, because the market goes up, down or up. So you can only look up or down. So once you establish your trend, your current high and low, if you're buying, you want to be buying the middle part of the range to the low range. So right now, if we look at this example that I just pulled up here with those lines, if I'm buying, I want to wait for the impulse, which is here, the down move, before we go up and enter off in that up move so we can profit, right? And that requires patience, it requires risk management and discipline, and that's going to allow you to find more setups. But you can't do that if you're always just forcing the market to present you setups that aren't ready to be presented. And what's going to end up happening is you're going to get into positions that you thought were your position, and then it ends up being a bad position. So a way to find consistent trades every week is, number one, of course, you need a winning consistent strategy, right? You need a winning consistent strategy. You need a winning consistent strategy, and not just a winning consistent strategy, you also need to have risk management. Okay? Because risk management is going to allow you, risk management is essentially the pyramid point that assembles your whole strategy to work in the first place. So the base is essentially your strategy. You know it's a working strategy. It's proven to work. You either have gotten a mentor or you figured it out yourself. You have a strategy. All right? Now, what's next after that, if you have a strategy, is your risk management, because that's the only reason you could be losing and not actually making money. Because if you have a winning strategy and you have capital, the only thing missing is your risk management, right? So if you have capital and you have a working strategy and you're doing well, sometimes that excitement causes you to over leverage and enter extra positions that you didn't actually need to enter because of that excitement. And let's say your rule is to trade only, like my rule is only 1 to 2 trades per day. I used to get excited and I would win one trade or a second trade, and I would do like 3 or 5 trades. And sometimes that would be a good thing, but that's not a consistent rule to follow, because if you keep doing that, you're going to eventually blow your account, because if you get too excited, let's say you win 2 trades and you keep going, that's going to increase the odds of you winning. Of you losing. Right? And because we trade smart money concepts, supply and demand, fair value gaps, order blocks, because we trade smart money, we don't even need to be trading 7 times a day in the first place. So you need a winning consistent strategy, and you need risk management that prevents you from over leveraging so you don't lose your wins that you do make. And that's going to allow you to actually scale and grow your account so you can actually make money. But yeah, guys, it's not that complicated when it comes to stuff like this. I just wanted to make this quick video for today. It's about 8 minutes long. I want you to write this down: risk management and winning strategy, because trading is a mechanical process. You know, they say, the mindset, it's really, you are actually what makes the trading non-mechanical and creates the problem, because trading should be easy. You should have a working strategy, and all you have to do is have a step-by-step plan that you can show up every week and go into the markets with, so you can just trade every week. But if you don't have a step-by-step system that you can just look on a piece of paper and follow the steps every week, then you're not going to be a successful trader at all, because your strategy needs to be, it's a mechanical process, because it needs to be something you need to be able to do every single week in order to make money. Because your whole strategy is your ability to find setups, and you're obviously your strategy, but your ability to find setups is the consistency that makes you the money in Forex, is your ability to find setups, right? And so how that happens is by you sharpening your skills, by being on the charts, backtesting. Backtesting is when you find 2 to 3 examples of your trade setup every single day, and you take screenshots of that example so you can train your brain to remember what these setups are supposed to actually look like. But yeah, guys, I hope this video was helpful. I'm going to end this here. And if you guys want to join my free Discord, you can just click in the description. I have a free Discord for traders like you and me that want to join and come share any ideas and connect with like-minded individuals. I have other traders that don't even trade the same strategy I trade, that's just in there just to come together as traders, because there is no such thing as a winning strategy. There's only different strategies that work, and it's you that makes it win. So there's no secret, there's no winning strategy. I just have a strategy that works for me, which is smart money, and I just share it by methodologies with people. But if you have any questions and you want to ask me something, or you want to share the charts with me or do anything like that, just let me know. But yeah, guys, peace out. I didn't press stop. Fuck.